Your bank has a secret menu and you aren't on it. Have you ever noticed this absurdity? Millionaires get everything for free, from airport lounges to concierge services, while you pay a $35 fee because your transfer was delayed by 2 hours. This is not an accident, and it is not a system error. It is the fundamental business model. Today, I will expose the 3 levels of net worth where banks completely change their attitude toward you. I will show you the cold math of each caste and explain why the system is designed to keep you exactly where you are right now. You will find out who is actually footing the bill for the free service provided to wealthy clients and what you can do to stop being a sponsor of someone else's success. Watch this video to the end, because in the finale, I will reveal the scheme used by the world's wealthiest families to legally avoid paying taxes for decades. If you want to understand the real power dynamics of money and exit the matrix, subscribe to the channel right now. We are beginning the deconstruction. The first level is the extraction caste. This includes everyone whose net worth is less than $30,000. Here is what banks never admit in their advertising. According to a 2024 Financial Consumer Protection Center report, 80% of all bank profits from overdraft fees come from just 9% of customers. 9% of the people in the most vulnerable positions are effectively paying for the banquet for everyone else. This isn't a service. It is a targeted capital extraction operation. In the last year alone, banks collected over $12 billion in fees. The average purchase amount that triggers a $35 penalty is only $24. You simply bought lunch before the check synchronized. In the end, you pay a fee equivalent to an annual percentage rate of 16,000%. Even professional loan sharks look at banks with envy at those numbers. As Nassim Taleb writes in Anti-Fragile, the system always shifts risks onto the weakest. But there is also a psychological aspect that no one talks about. Research by scientists from Princeton and Harvard proved that when a person lives in a state of scarcity, their cognitive load skyrockets. Your brain operates in survival mode, which temporarily lowers your effective IQ by 13 points. You aren't thinking about strategy. You are doing agonizing mental math at the supermarket checkout. And this is the perfect trap. Survival mode doesn't create wealth. It just allows you to last until the next cycle of extracting your money. The second level is the premium illusion caste, where your capital fluctuates between $30,000 and $1 million. Here, banks start to be slightly less hostile. They offer you programs with beautiful names like Priority, Gold Status, or Privilege. It seems to you that you are finally at the top. But let's look at the math. Bank of America offers Gold Status for a balance of $20,000 or more. This gives you a 25% bonus on cashback. It sounds solid until you calculate the real money. Your cashback grows from 1.5% to 1.875%. What's the catch? To maintain this status, you must keep a significant amount in accounts with an interest rate of 0.01%. In 2026, when high-yield savings accounts offer 4 or 5% per annum, keeping $50,000 for the sake of premium status costs you $2,000 in lost profit annually. You are literally paying the bank $2,000 for the right to have a pretty card and free checkbooks. Federal Reserve research confirms that bank bonus programs are a mechanism for redistributing wealth from the bottom up. Every year, $15 billion move from consumers with low credit scores to those with scores above 780. People with low ratings pay interest and fees that the bank turns into miles and cashback for wealthier clients. The middle class in this game is just a layer that thinks it's benefiting, while in reality, it just stops being the direct victim of extraction. And finally, the third level, the VIP Club, capital of $10 million and up. This is a completely different financial universe where the laws of money physics flip. At this level, the bank stops being a place where you store money. It becomes your partner in the game against the tax system. This is where a strategy called buy, borrow, die comes into play. Here is how it works. Step 1. You buy assets that constantly grow in value, such as shares in tech giants or luxury real estate. You don't sell them, which means you don't pay capital gains tax. Step 2. You take out a loan secured by these assets. Since borrowed money is not considered income, you don't pay income tax on it. The bank gives you this money at 4 or 5%, which is twice as cheap as personal loans for ordinary people. You live on this money in luxury, while your investments continue to grow faster than the interest on the loan accumulates. Step 3. After your death, your heirs receive your assets with a so-called stepped-up basis. All capital gains taxes accumulated over decades are simply reset to zero. Your children inherit the fortune at the current market price and can sell everything immediately with zero tax. This is not a loophole in the law. This is the system working exactly as it was designed for those who can afford the best tax lawyers. The rich don't just have more money, they have more mental space. In the extraction cast, you spend colossal energy solving hundreds of small financial problems every day. In the VIP cast, you don't make financial decisions, your team makes them. This cognitive advantage accumulates just like compound interest. Let's compare two people with the same income of $50,000 a year. The first lives without a financial cushion. Over 30 years, he will give the bank about $70,000 in fees, penalties, and higher interest rates due to a low credit score. If that money were invested in an index fund, it would have turned into $270,000 by retirement. This is the price of his ignorance of the rules of the game. The second person, with the same income, creates a $1,000 buffer, moves savings to a 5% account, and automates payments. He avoids fees and, over 30 years, creates a capital of $170,000 just from the difference in approach. The banking system has castes because it maximizes corporate profit. The extraction caste pays the fees. The middle class provides liquidity while thinking they are getting bonuses. And the VIP caste enjoys all the benefits, pays the least, and passes wealth to the next generations without loss. Once you have seen these levels, you will never be able to look at your bank account the same way again. Your task is not to blame yourself, but to understand which caste you are in right now and perform a series of boring, disciplined actions to move higher. Create a buffer. Automate savings. Stop letting the bank earn 4% on your money while it pays you pennies. Most people will watch this video and change nothing. They will continue to pay the poverty tax. But if you have watched until this point, you are no longer among them. Take the first step this week. Open a high-yield savings account and set up an automatic transfer of any amount. This is the first crack in the wall separating you from the next caste. Stay mindful and protect your freedom.